Good morning, good afternoon, and good evening for those of you for joining all over the world today. I am, again, really excited. We are here on our 102nd webinar in this series of webinars that we've been doing over the past 6 years. I'm really excited about this one because this is the first one I get to do with my friend and colleague, Michael Schwartzman, about cash and some of the implications of cash management for the digital solutions economy. So welcome, Michael. I'm excited to have you here. Thank you for taking time out of your day to speak with us.
Thank you very much, John. I'm very happy to be with you.
All right, so as usual, we'll get started. Today we're going to do some housekeeping. I'll remind us why we're here from a digital solutions economy perspective, and then we're going to have a little bit of a fireside chat with Michael and talk about what it is that the important issues and challenges that we face and things to think about in the digital solutions economy for Treasury. And then we'll wrap up with a Q&A. Some quick housekeeping. This session, again, is being recorded, so feel free to come back if there's anything you want to revisit. You're certainly welcome to do that, and please do share the links through your LinkedIn or with your friends and colleagues throughout your organization. We'd love to have people check out these sessions. You are welcome to ask questions throughout this session. But we will have a specific Q&A session at the end, but certainly feel free to ask questions, clarifications throughout the session. And then please do check out our other webinars and contact us on all these different media. You can check us out on our bramasol.com or through LinkedIn. Check out our videos here in YouTube. We've got actually, in addition to the webinars, we've got about 150 other videos and different snippets you can check out on YouTube, including RAR user groups, Treasury user groups, customer stories, so go check those out. Or join the action here on iHeartRadio or through Apple iTunes and Apple. So go ahead and do that. So with that, let me tell you, and let's give a little bit of background for those of you who are not familiar with the digital solutions economy. So what is it and what is the digital solutions economy? Well, essentially, it's a customer-driven business model in which the customer has control. It's moving away from selling something as a box or selling something individually to really a service-based or selling something as a service, an XaaS type of a model. And of course, those models can include all different kinds of subscription or service-based models. You could have a standard subscription where you pay a monthly fee. You can do that. SoundCloud is a great example of that, or Apple Music. You can sign up for all of those. You pay a monthly fee and get access. But of course, there are many other versions of that. You can have consumption-based or usage-based models. You can have revenue sharing models where I buy Discovery through Amazon. So many different models. And the one thing that's important to understand in this is we think of, or many people think of this traditionally as a customer-driven model, a B2C model, but the reality is many companies in a B2B model do this as well. Think about, how many businesses buy security services or software from McAfee, or buy server power from Pegasystems or VMware. How many companies sign up for Google and Amazon on a usage basis? And by the way, you can buy testing instruments, medical devices, medical beds, many of our customers. So there's so many different things that you can do through this digital solutions economy. And what it really is an engagement model. It's a way in which a customer can engage early on with your business, allow them to engage either anonymously or not, walk through and create their own solutions and bundles, have flexible delivery and fulfillment, get a unified bill or a bill the way they want to see it, and then implement flexible payments and collections with the privacy, security, and risk that they want. And today we're going to focus kind of on this payment and collections. And SAP has a whole series of, and Bramasol brings you a whole series of different solutions that allow you to implement any single one of these different areas of the business. But today we're going to focus on right here. We're going to focus on cash and treasury and banking. because we find that that's an area that many customers of ours, they don't think about. They understand the implications of ordering upfront and how do I create a subscription bill? How do I do configure price and quote? What about my entitlement schema? But so many times we don't think about the fact that we actually have to collect all of this revenue. And when you enter into the digital solutions economy, the model, the methods, all of that changes. And so today we're going to explore a little bit with Michael. So Michael, we're going to join FDR here in a fireside chat, talk a little bit about this, and you can share some of your knowledge with the audience. But why don't you take maybe a minute or two to introduce yourself and help people understand a little bit of your background.
Thank you, John. Yes, my name is Michael Schwitzman. I have been with Bramasol for over 2 years, I believe, and my SAP history is spanning over 20 years. To be precise, it's over 22 years. And I specialize in treasury and cash management and payments and anything that actually touches cash balances on your GL accounts or banking. Prior to doing the SAP, I've been involved directly with treasury and banking. I have an MBA in finance from NYU Stern School of Business, and been happy consulting, been happy in the consulting world for many years. So having said that, I'll be happy to share with you some of my observations, my knowledge, and would be happy to answer any of your questions.
Fantastic. And Michael, I know you've, it just every time I speak with you, I learn something new. So I'm really looking forward to that. So thank you. So let's start with, we have some areas to address. So let's talk a little bit about first, why is it so important to be thinking about accounts receivable, about collections, and all of this in this high volume environment? Why is that so important?
That's a great question, and we know now, right, with the digital economy, with the expansion of what you see around us, we get, as you, John, explained, we get the processes for receivables, and those receivables may be quite substantial and numerous in numbers. And as a result, we depend on very much either on the quick payments that we need to charge the customer's credit cards or the payment services. But not only that, we need to be able to process those payments quickly by applying those payments to the open items, such as invoices. And once we do that, the next step clearly is to get it as quick as possible to our treasury department in such a way that they could manage the cash and funnel the cash into the received cash into perhaps the investments that they need to do within the company's portfolio of potential capital expenditure investments, or the investments that they do to store cash that is extra in your company and you wanted to make money on that cash while it is being stored, or to use it for your accounts payable to pay all of your outgoing outgoing payments for purchases, or clearly for your payroll and bonuses and what have you. So receiving cash becomes a very important function of the treasury group, and they need to be able to do that very efficiently within this high volume environment.
And that high volume is also high velocity too. We call that, volume and velocity. It can be monthly, it can be biweekly. I mean, certainly it's far more accelerated than what we thought of in the traditional sense of I send you an invoice, you have 15 days to pay. It's a very different process. In fact, I would also argue that in a way, the subscription economy is almost, I won't say eliminating, but reducing traditional accounts receivable because you're getting paid the minute you create an invoice almost, right? There's not that traditional lag, right?
That is correct. Usually, it used to be that a regular invoice would give you a term of payment, such as net 30 or perhaps 2%, 10 days, net 30, something like that. When you pay early, you would get the 2% discount. And then if you pay after the 10 days, you need to pay the net. With the digital economy, it's more and more prevalent that you pay almost immediately. And the payment methods for this are perhaps credit cards or payment cards or purchase cards, or perhaps the fintech, the financial technology company payments, such as PayPal or Apple Pay or Google Pay type of thing.
Mm-hmm.
And you would get those almost immediately, or perhaps another payment method that actually have been gaining momentum is a direct debit directly from your bank account.
Right.
And that all it needs to be integrated so that not only you receive the confirmation of those payments, because and those payments would be so-called credited from the banking point of view, credit to your bank account. You need to know what's going on probably throughout the day to view this information, and to be able, if you have multiple subsidiaries and those multiple subsidiaries may have multiple accounts, you need to be able to manipulate or actually sweep that into the treasury coffer, and then the treasury coffer will know how to deal with it. And for that, you may use indeed the what's known as COBO Robo. Now, COBO is collection on behalf of,
Right.
right? And it's kind of a broader concept than Robo, which is receipt on behalf of.
Sure. And
So
those are tools they're using now. I mean, in the past, when we had accounts receivable, you could factor your accounts receivable, and that was a way for you to collect your money faster or um, consolidate collections and get your cash from a single place. But in the digital world, and some of these now, as you said, Kobo and Robo are a way to do that. Maybe you can explain, what is the difference between those two, really?
right. Well, let me, before that, I would say the one way to consolidate it, SAP has an add-on that's called digital payment add-on. And that
Right.
digital payment add-on, first of all, does provide an easy way to integrate with your on-premise S/4HANA solution, all right, or even the cloud edition solution. Okay, this add-on is a cloud solution, so that it works very nicely, and it integrates with multiple domestic and international credit card companies, integrates with all of your fintech companies, and together with multi-bank connectivity that you may have for various subsidiaries of yours, it actually brings the cash much faster into the doing the cash application to your open items on the one hand. On the other hand, it clearly gives you an opportunity to get this cash, sweep it or pull it into your treasury accounts, in which and out of which you're going to manage your cash. in terms of what really COBO means, COBO means collection on behalf of. That means not only that you can do the receipt of the physical payment, it becomes a part of your all generation of invoicing, right? It involves to a degree your collection management, your integration with the credit management, the dispute resolution, and so forth.
Mm-hmm.
Where is, and of course the receipt on behalf of, right? And a receipt is basically a physical receipt. It's only one component which is more closely related to the treasury management and receipt of cash, whereas COBO may involve other parts of your what used to be accounts receivable processes.
Got
Um,
it.
so and again, it's more now than ever that COBO becomes the focus of the SAP because it integrates all of those um, uh, financial supply chain management activities together with the physical receipt of cash
Right.
from
Right.
your customers and clients and patients.
Right. And that also facilitates, you and I spoke about this previously, and I didn't put this on the slide, but um, call it in-house banking, which relates to the ability to manage that cash efficiently and effectively. But in the world we're living in, where we talk about the volume previously, but what you didn't talk about is the global reach, where now in the digital world, I can have people subscribing and signing up all over the world, and now all of a sudden I might have some interesting currency challenges, and managing some of that can be facilitated or made more efficient through the use of Kobo Robo, right?
That is exactly correct because if you think about the treasury operations per se, you would think that your treasury department is kind of like a little internal bank,
Mm-hmm.
right? So when you receive cash, just as any bank would, they receive cash from their depositors. You receive cash from your customers, and the way you manage that cash becomes is very important. I mentioned some things like investment stuff, but many parts of it is the intercompany transactions, especially if you're located in different countries, or even if you're located in one country, but you have many subsidiaries, and all of those subsidiaries are legal businesses, and they have their own business products that they promote and sell and deliver to their clients and customers, right? Those different subsidiaries need to sometimes to receive money to be used for payroll. They need to have some intercompany loans. They need, and all of this is done by the centralized treasury, which would allow you to actually manage these kind of intercompany banking operations. And therefore, SAP has this beautiful facility of in-house cash that does allow this. And many companies they have a ability for that, not only to supply, get the money out of your clients and basically clear your open items and bring it centralized into centralized pool of your accounts within the central entity. You would be able also to actually do the regular banking like loaning, intercompany loaning,
Mm-hmm.
um, and perhaps viewing whether if your subsidiaries are working at the arm's length arrangement, then you would need to probably charge the overdraft fees, or you would need to charge the overdraft interest, or charge the interest for negative balances in that respect. and or pay the interest where your intercompany, and which not necessarily means cash. It
Right.
means the intercompany funds um, that
Mhm.
the central entity, the bank, will pay them for keeping subsidizing some of the other activities within the group of subsidiary companies with the center, the
Got it.
financial uh,
Cool.
headquarters.
So with all of that, and I know, we've met with many customers, and of course you're working on a client where, they're doing a lot of the consolidations. We worked on another one recently, a couple of years ago, Matthews, and they did some work around all of this. And there are great tools out there from SAP, whether it's S/4HANA or ECC, to help with that. But there are some issues, Michael, to consider in this. It sounds great. Hey, let me consolidate all of this into one place and make it easy, but um, governments don't always make that easy, and there are some issues to consider. One of them being currency regulations, right?
That is correct. And in many foreign countries, the companies require that everything be done fundamentally in their local currency, and you may not be able to pay um, out of your bank account in foreign currency. They would say, "Hey, you would need to go to the domestic exchange and convert at the government rates your currency, get the permission to pay, and then or submit your basically your invoices to pay. But also, when you collect the money in foreign currency, they said, no, 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 no. You're not allowed to keep the foreign currency. Everything is in yuan, for example, in China, right? And you need to convert all of your dollars into yuan at a certain rate, which is pretty much a fixed rate, and that's what you do. So the currency play a very important role in the way cash is managed. But for example, if you decentralize the location in China or some other countries um, uh, would like to receive the money from a European entity or from a US entity, um, uh, and they actually or receive it in credit cards, and the credit card is paying in euros or paying in dollars or British pounds or Swiss francs, what have you, then it becomes the issue of foreign exchange, and the foreign exchange needs to be subject to the local regulations on the one hand. On the other hand, is clearly we are exposing, as a company who does this, they're exposed to the foreign exchange risks.
Right.
So that is another consideration of the financial markets, and what the company can do once they receive the money in foreign currencies, whether they're allowed or not to be using various hedging mechanisms that available within SAP to do, or within the markets um, to do the hedging against the fluctuations in foreign exchanges. Yes, in foreign exchanges. Yeah. And so this is one of the considerations, clearly.
Right. Another one that you mentioned, we talked about legal structures and local regulations on legal structures. It may very well be that you would like to do this, consolidate everything into, let's say, your Ireland location for all of Europe, but that might not be possible based on some of the legal structures and local regulations, right?
That is exactly true, and it depends really on your subsidiaries. For example,
Mm-hmm.
you may have an Italian subsidiary which has an extension, those three letters at the end of the company's name, representing a corporation that may have less of an issue
Mm-hmm.
to have a to receive to transfer the receipt of, or the COBA to the central entity in Ireland. But if it's a partnership, that may be not so easy anymore. So the legal structure of your subsidiaries play a very important role. That's why you would see that when the COBO robo structures are even considered, both the treasury departments and the tax departments of corporations become a key groups that try to understand, define, and manage this kind of improved or optimized structure so that the treasury could be centralized.
And of course, everybody's favorite topic is taxation and tax jurisdictions, and that's really complex too, because any of these influx or any of these payments might be subject to multiple variations in taxes depending on where you are. We're familiar with here in the U.S. we pay sales tax, but that's not true in Europe, for example, where you pay value-added taxes, and there are different tax structures and tax schema, and you have to kind of pay a lot of attention to that as you go through this process, right?
You're absolutely correct. The value-added tax in Europe basically requires that you pay into the government coffers for anything that you use internally. So if you, for example, develop something and you purchase some goods that go into your product, you pay the value-added tax to the supplier of those products, and then when you basically sell something that was assembled together or that was put in use for the purposes of selling to some other client or a third-party client or the third-party patient or whoever, then you collect the value-added tax. Now, as a result, the amount that you collect and that you pay needs to be netted out, and a report needs to be submitted to the local tax authority for their reimbursement to you for value-added tax that you paid. So it is a complex process. And then don't forget that you need to do that in the local currency generally, because the governments operate in local currencies. Sure. And even if they are part of the EU, there are some countries within the EU that do not have euros, that have local currencies. Yeah. You have it with the Nordics, right? They have Swedish krona, and you have the Norwegian kronas, and you have the Polish zloty, and you may have other. Of course, and although this is not a part of the EU country, the Swiss franc. Right, which is not a part of the EU. However, it behaves as if it's always included in all of the kind of agreements within the EU. So it becomes a part, but their currency is Swiss francs, and therefore you need to be very cognizant of the foreign currencies in which the payments are made. And then, of course, in the United States, we don't have this kind of an issue. We have really a contiguous country in which we have only one currency, and they're subject to the so-called interstate sales laws, so that we don't need to consider this. However, what's important here is that you still have the legal entities, and the relationship may be at arm's length. So you need to be able to perhaps charge the proper transfer pricing on the issues that you sell on the intercompany basis, or charge, for example, interest on the arm's length basis. So there are many considerations that need to be considered. And of course, so in addition to the legal department and the treasury, here you need to have also a tax department that not only considers those taxes that are considered to be kind of use taxes or the sales taxes like VAT, but also your income taxes and how those need to be accounted. So that's also very important. And in an international environment, that becomes a very critical consideration for how you structure your COBO or ROBO arrangement.
Mm-hmm. Good. Good. Well, Michael, I listened to this and it's like, wow, that's a high road. That's a lot of hurdles to overcome and things to think about. But the reality, the reason we're talking about this is actually because there's a lot of benefits to this. And maybe you can walk us through the benefits of implementing Robo and Kobo and but with all of those hurdles in place, why would anyone want to do this? And the reality is you can facilitate your business, save a lot of money, and help focus your IT team. So maybe you can walk us through some of the things that you shared with me there.
Sure. One of the most important things that treasurers are judged by how good they do is not only how much money they make by investing the free funds and how efficient they disperse the funds to the subsidiaries or to when that they make the bank accounts have sufficient funding to do the payables. In many respects, there is a lot of fees. There are a lot of fees that are associated with banking, external banking. And those fees end up to be quite substantial. I believe that PricewaterhouseCoopers had a report a few years back that I read that basically said that the maintenance of a single, a single account costs probably about $5,000 a year. In terms of all the fees associated with ownership of that bank account. That includes not only the transaction fees, not only the fees that they charge you for having an account, but also for your IT people that need to support this account, for people at the Treasury Department, and so forth. So minimizing the fees is probably some of the most critical aspects of the Treasury Department, right?
Okay.
And as a result, what one would want to do is minimize the number of accounts. That's the first most important thing that you could do by minimizing the number of accounts, so that you would receive into, say, a single account your cash, your payments from your clients, and then non-cash intercompany funds are dispersed to perhaps the subsidiaries, right? And therefore, those would be the minimization, not only by the fees that are associated with the number of accounts, but the fees associated with the transactions that you may have between the accounts. So the transactions such as the wire transfer, the book transfer, or however you transfer the money between the different subsidiary accounts, especially if you have the accounts allocated in different banks. So the book transfer, meaning that transfer of funds within the same bank, now is not really within the same bank. It's a wire payment between two different banks, and then therefore those are quite expensive. They're on the order of maybe $9 to $10 per transaction.
Right.
and those would end up quite expensive if you need to collect the money on the daily, sweep the money on from those external banks into the central location into a pool account, and that pool account is not the same. It does not belong to the same bank as the collection accounts that you have at the subsidiaries. So that becomes a very, very critical component of the consideration within and that is within say a company, a corporation that is located within one country, like in the United States, right? But if you are located in Europe, and then you have multiple currencies, and you may have currencies such as United States dollars, British pound, you may have clearly euro, you can have Swiss franc, Nordic krona, and everything else. On top of that, you need to pay the foreign exchange fees. I don't know what they are, is to buy and sell foreign exchange, right? And the fees are actually hidden in a spread between buy and sell of the foreign exchange. So there's enough money and meat in those fees that also warrant some kind of centralizing the payments into a single entity, that you would also be able to do the hedging by minimizing the exchange rates and also minimizing the spreads that you pay on buy and sell. And that is something that you would see in EU, and you would see something like this in the union between Australia and New Zealand, for example, and you would be able to move the funds much easier. So at times you have, if somebody pays into say Sweden in Swedish krona, they may retain it locally. However, if somebody pays with euro into that entity, instead of going that payment going into Sweden, perhaps you keep it into central location that may be in Ireland or maybe in the Netherlands. So that becomes the benefit that you are centralizing the key currencies such as US dollar, euro, and perhaps British pound, and then the local currency they keep for local purposes, for
Exactly.
to fund their payroll and so forth.
Right.
So and then of course the people that need to support your treasury operations, whether you decentralize treasury operations versus your centralized treasury operations, and clearly there is a economies of scale that allows you to save a lot of cost on your centralized operations, right? Exactly. And that's on the other hand, one hand, but on the other hand, you see, then you could concentrate, especially for the digital economy. You would be able to employ the new thing within SAP, such as artificial intelligence and machine learning, to produce the cash applications, okay, and to apply the cash application to your local open items, and that is actually something that that SAP is moving more and more towards to, by allowing the payments that come in and actually to be processed as a payment advices, right? Not the physical payment, but payment advices to open up to clear up the open items and to identify the proper invoices by machine learning, so that the payment that comes in may would be using the self-learned algorithm of artificial intelligence to find the proper open item and to match that proper open item, even though the amounts of the payment may be the same for like hundreds or thousands of items. So
Right.
that is the key. So that's something that is also is part of this robo and COBO process.
Fantastic. Well, those are great. Thank you, Michael. Um, I don't see any questions out there yet. Let's wrap up. If anybody has any questions, please, as far as things. So Michael, thank you so much. That was great insights. I very much appreciate, just your wealth of knowledge never ceases to impress me in terms of all the things that you know about. So thank you for sharing those with this audience.
Thank
Um,
you.
you know, net, I think what we heard here is companies we know are moving to these new business models where we see the volume and velocity of transactions increase. And not only the volume and velocity of those, but how many are showing up in multiple currencies and multiple venues and multiple jurisdictions. And you need a way to manage that, and you need to manage them efficiently. And these companies need what we'll call a scalable solution for efficient receivables management. And Robo and Kobo are great tools to do this. Of course, you need to keep in mind as you roll out or we think about a project like this or a program like this, there are some items you need to keep in mind, including foreign currency and currency regulations. Michael hit on that with certainly the yuan in China, but many other countries have either fixed exchange rates like Saudi Arabia did for a long time, or others have currency regulations about expatriation of those currencies. Others you'll want to manage because the risk involved in those currencies and the fluctuations of those currencies is so enormous that you want to not really have a lot of that currency in place, and so you want to manage that process more efficiently and effectively. You want to make sure that you're aware of the legal structures when you create subsidiaries or partnerships or limited partnerships, and what are the implications to that. Certainly, as we think of one of our clients, which is a healthcare organization, they may have not-for-profit or nonprofit, and what are the different rules in different parts of their business? So you have to manage those. And of course, finally, everybody loves the tax man, and we need to make sure that we keep in mind, the tax implications. But the reality is the benefits are huge. If you can figure out how to get this done, and of course, Bramasol offers experts like Michael and others on our team to help you through that process, you can reap huge benefits. Many of our customers have seen big benefits in terms of saving, as Michael pointed out, saving bank fees, whether it's on consolidating bank accounts, consolidating those wire transfer fees into a single entity. You can save and free up cash so you have more cash to invest because you've consolidated that cash together. It also gives you a much better, when you have all of these different transactions all over the place, it becomes harder to really understand your cash position. And gives you an opportunity to know whether you need to borrow overnight, you can lend overnight. So it gives you that flexibility, that visibility as well. Certainly you can reduce risk, whether that risk is on currency risks, inflation risks, or interest rate risks, depending on how you manage that. Certainly this process will help you manage that as well. You can use it to certainly optimize. We got to be careful the words we use here when it comes to optimizing taxation and how you manage that process. But certainly optimizing the taxation in different jurisdictions can happen as well. So huge benefits to an organization. Of course, it then frees you up once you've centralized a lot of this to use the tools that Michael mentioned, like AI, artificial intelligence, or machine learning around Cash App. But you can use tools like multi-bank connectivity. You can use some of the more sophisticated cash position, cash forecasting tools that SAP provides as well, because you've now got a much more centralized, better view. So again, Michael, I want to thank you for taking time out of your day. I know you're busy on so many different things, so thank you for your time.
Thank you, John. Thank you. It was my pleasure to share some of the observations and knowledge that I've had over the years in that area, specifically of in-house banking and in-house cash. And that is one very exciting and very opportune area for treasury operations to save money.
Absolutely. And thank you to our team, and thank you to all of the customers who support these on an ongoing basis. And I want to thank all of you for joining. I hope you have a great day, or as my friend and colleague would say, take the initiative and make it a great day. Thank you again for Bramasol, and I look forward to seeing you all on the next webinar. Bye-bye.